Good afternoon and welcome to Cris-Tim Family Holdings conference call, where we will be presenting the consolidated preliminary results for 2025. Before we begin, I would like to mention that this call is being recorded and that the recording will be made available on Cris-Tim website by tomorrow the latest. By joining the video conference, as indicated in the call invite, you have implicitly consented to being recorded. If you do not wish to be recorded, we kindly ask you to leave the call. I would like to mention that today, during this teleconference, we might be making forward-looking statements regarding the future performance of Cris-Tim Family Holding, and that the actual results may differ materially. We encourage you to review the disclaimer included in the presentation, which you can see now on the screen. This disclaimer applies equally to all statements made in today's call. We can now begin the call since I've done the organizational part. My name is Zuzanna Kurek and I'm Investor Relations Manager at Cris-Tim Family Holding and your moderator during today's teleconference. I am joined today by Radu Timiș Jr., Chief Executive Officer, and Răzvan Furtuna, Chief Financial Officer of Cris-Tim Family Holding. Regarding the structure of this call, let me walk you through the setup. Firstly, Radu Timiș will deliver the opening remarks highlighting key financial and operational KPIs and the progress made on the Investalin project. Following that, Răzvan Furtuna will present a detailed overview of our financial results, as well as we will conclude with the 2026 budget, which will be voted next week in our general meeting of shareholders. Once the presentation concludes, we will move to the Q&A session. Please be aware that all the participants are currently on mute. If you wish to ask a question, please type it in the chat window. The chat will remain open throughout the management's presentation. I will be moderating the Q&A session, and for the benefit of those watching the replay of the teleconference, I will read each question aloud before it is addressed. Your questions today will be answered by Radu Timiș Jr. and Răzvan Furtuna. Thank you all for your patience, and we can now kick off this call, and I would like to invite Radu to share the opening remarks.
Thank you, Zuzanna, for the introduction. Good afternoon, dear investors, dear collaborators. It's a pleasure to present to you the results of our company, Cris-Tim Family Holding, for the year 2025, which has just been closed, for the preliminary results. We are very proud of our achievements this year, as this has been our strongest year recorded yet in 33 years of activity. We have delivered, in our opinion, exceptional performance in line with our budget and established objectives at the beginning of the year, with positive results on absolutely all brands that we produce, as well as all distribution channels. In a year which has seen a lot of significant volatility in terms of costs and in terms of consumption as well. We've been seeing consumption quite stagnating since August last year, and we anticipate a 2026 of very moderate, small single-digit growth in terms of consumption for the categories where Cris-Tim is present. So to start with the figures, I'd like to mention the most important of our business lines, the cold cuts division, which has recorded a growth of 5% year-on-year in terms of turnover. Going to ready meals, which is our second most important business division, we've recorded a significant growth of 18% year-on-year. Most of the growth we've seen in our premium brand, Matache Măcelaru, a brand that's continuing to grow significantly above market and bringing to our company significant margin growth. Broad-based demand has increased on all sales channels, so we have seen increases on international key accounts brands, on private label products, on traditional trade and export as well. Moving on to our financial performance, we have increased our revenues to RON 1,155 million. Q4 alone has delivered 7% year-on-year growth across our two core segments. Our gross margin expansion has been supported by a 5% reduction in raw material costs and consumables as well, As mentioned at the beginning of this meeting, this has offset salary increases and utility increases, which have been significant in 2025, as electricity and gas prices have increased consistently last year, and salary increases have increased as well, together with due to the annulment of the fiscal facilities given before by the Romanian government for our industry. Net profit has been seeing a significant growth of 26% year-on-year, which reflects our operational excellence and efficiency, and as well as lower net financing costs. On the investment side, it's very important to mention that our Investalim investment program, due to finish and be complete in 2029, has been developing very well. We've started our first two objectives, the frozen storage facility, which we are building in Filipești de Pădure, as well as for fresh meats. And the second objective of the logistics warehouse expansion, basically moving our main logistics hub to Filipești de Pădure, has also been started, and both objectives will be fully delivered by the end of 2026 and operational as well. In 2025, the amount we have invested in the Investalim program amounted to 7.7 million euros, and many of the payments which were supposed to happen in 2025, we've managed to postpone into 2026 advance payments for equipments and buildings, and in this respect, optimize our cash flow and investment projections. We are very positive about completing the two first objectives of the Investalim program. In fact, we know that we are also the first company in Romania that has asked already for reimbursement of payments from Investalim program. So these objectives are being delivered on track.
Thank you. We will now move to the key commercial highlights to be shared by Răzvan.
I will mention, Zuzana, I will continue with the commercial highlights and let Răzvan for the financial performance. Looking on each of the divisions, first of all, on the cold cuts division, we've recorded growth both in terms of value and of quantities. We've had a very healthy price volume mix, seeing an average increase of 3% on the average price of finished product, a 5% growth in turnover, and 3% growth in volumes. This has helped us basically to increase our EBITDA by 7% year-on-year to RON 146.5 million. Looking at the growth on brands, the most significant growth, as mentioned before, has been recorded by Matache Măcelaru, our premium brand in the portfolio. Cris-Tim has recorded a growth of 3%, and the other brands in our portfolio have recorded a 7% increase. This has shown a very resilient portfolio. We have continued to increase significantly our distribution, as well as in the traditional trade channel where we have increased the number of clients we are currently distributing to. And this very strong mix of price and portfolio has allowed us to continue growing at a superior rate than any other of our competitors in the market and consolidate our position as leader, both in terms of volumes and in terms of revenue. Moving forward to the ready meal segment, we have seen the best performance yet in this segment for us. It's been a fantastic year where prices have increased with 5%, sales by 18%, and volumes by 13%. This is due, of course, to an increase in consumer demand, which has been higher, of course, than the cold cuts category, and increased presence in modern trade, where we have extended our distribution as well as on brand, but also on private label segment. Operational efficiency as well, scaling benefits of growing volumes and improved efficiency on purchasing in all categories, as well as raw materials, consumables, and other operational expenses. If we look at the revenues, 14% growth on our most important brand, Bunătăți, and 24% growth on the other brands, which means private label, which we are producing for retailers. If we look at the growth and the domestic revenues by sales channels in Romania, the most significant growth has been recorded in the private label segment, although this is the smallest as components of our portfolio. We have recorded a 6% increase on the brands we deliver in international key accounts and 7% increase in traditional trade. We are particularly proud of the traditional trade channel because this is a channel that has been decreasing constantly every year for the past 10 years in terms of market share, as international key accounts take more and more of the market share of the traditional trade. Taking this into account, the fact that we are continuing to grow every year into a channel which is decreasing represents a great performance from our sales and supply chain teams. If we look at the breakdown by the sales channels, we see that, of course, the most important percentage in terms of sales is accounted for by our brands in international key accounts with 41.5%, private label by 11.9%, traditional trade 36.3%, and export 10.2%, which shows an excellent balance of distribution channel and product segmentation, which allows us to implement a very solid and very flexible commercial policy throughout the market. If we look at the export market, we have recorded a growth of 2% compared to last year, and we expect sales in the export channel to continue to be a stable contributor to overall performance, and for 2026 expecting increasing numbers as well for this channel. Thank you, Zuzanna.
Thank you, Radu. And now I would like to pass the floor to Razvan to take on the financial highlights.
Good afternoon, everybody. Starting with the turnover, basically, it was already discussed about this. We have still the first two segments are the most important ones. Of course, we have a 7% increase year on year on the two segments, and we have a decrease on other segments, and this is related to the change in the operations related to dairy business. Basically, starting 2025, we moved to an agent position. Basically, we are not selling, we are distributing, and we are receiving a commission for the distribution, which counts as turnover. This is why we have this 68% decrease in turnover. But this is something we already discussed in our previous meeting. The important fact is that both segments, both cold cuts and ready meals, delivered very good numbers from our perspective, with all the channels contributing, with margins increasing, and we reached RON 185 million in terms of EBITDA compared to 167 in 2025. On the cold cuts, we reached 146.6 versus 136.3, and on the ready meals 33.7 compared to 29.1. EBITDA of 27%. We think there is still potential on the ready meal side, but in the future, I think this sort of plus 25% EBITDA will decrease. Our targets for this year were very close to what we achieved. We have to take into consideration the fact that this year, 2025, the main objective of the company was to list the company, and the entire process went very well. We are very happy with the final results, and obviously the results of the company were also impacted by the listing cost. Moving towards costs, Obviously, we had a very tough year in terms of employee benefits. Radu also already mentioned the fact that last year there were some facilities reverted. We were expecting this even before they were announced. So basically, we prepare ourselves and the company for this. Besides these facilities, there were also increases in minimum salary, which also impacted dramatically. This increase of 27% in terms of employee benefits is also impacted about the IPO costs. We will revert to these numbers after the audited numbers. The most important part of the costs, which is related to raw materials, managed to decrease. The important thing is that the benchmark we use related to the raw materials, especially to the meat, decreased only 1.2%. So basically, our performance was better than the performance of the market, and this is related to our how we manage the process of acquiring raw materials during the year. Our expectation is that the market at this point in time is quite low. We expect this year to see increases in raw materials. We'll discuss about this later when we will discuss the budget for the 2026. Depreciation and amortization is in line with the investments we have done. And of course, third-party services are also impacted by the IPO costs. No other important changes. What is also important to say is that last year, beside the Investalim investments, we also invested in a new fleet. Basically, we had to repair the existing fleet in order to sell it, and that was somehow a negative impact on our cost, but overall it's not important. Also, the fact that we sold the fleet, it contributed to our results. So basically, the extra costs, the IPO costs, were actually covered by the existing fleet sale. This is an event which will happen every 4 years. So basically, the numbers look like for us, at least at this moment, we can confirm after the audited numbers, the numbers look very normalized at this moment. Still, the raw materials, consumables, and the merchandise costs are representing a very high proportion of our operational costs. It's less than last year, and it's moved from 66 to 61, 62%. But again, most of this it's related to our management, our model regarding management of the raw material acquisition. Of course, after the successful listing, there were incoming flows into the company, which, as promised from the beginning, helped us improving the financial position of the company. There were 303 million RON coming from the mother company, representing the loan, the intercompany loan we were discussing before the listing, and of course the capital increase. This helped us reaching a net debt to EBITDA a -1, and net debt to equity also negative. So basically, the financial position of the company improves significantly, and the company is now prepared to move towards our investment plans in a much better way. Basically, we already started to renegotiate out our lines in terms of, especially in terms of cost, with surprisingly good results. Currently, we are not. We will probably start to draw money for the Investalim and other capex in April. We didn't finish the tendering for the financing of the projects, but we are very close to end this process. Probably in 1 week or 2 weeks, we'll have a clear view on future of the financing of the company. Regarding the 2026 budget, we are expecting a increase in raw materials and consumables compared to this year. This is not for the moment not a real situation, because the prices are still quite low in at least in the meat markets. At least it started quite low, but it started to move on the upper side of the it started to move up in terms of prices on the carcass and the articles. We are comfortable with the level of acquisition we made this year. So basically, we are comfortable also with this with the proposed budget. Our proposal is EBITDA at 209.3, which is an increase of 30% compared to 2025, with increase in of 6% in revenues coming from both segments, main segments, cold cuts and ready meals. An operating profit of 175 million and the gross profit of 146 million. So basically, we have an increase of 30% on EBITDA and 16% on gross profit, taking into consideration also optimization the financial cost on the financial cost side.
Also, I'd like to add something here, that the revenue growth we are expecting in 2026 comes from two important areas. One of them is the launch of new premium product categories, which we've been doing very well in the past 2 years. We will continue to consolidate leadership in the categories where we already have the leadership position, and obtain leadership in some of the subcategories where we are currently second place. So by the end of the year, the company is expecting to have leadership in 5 of the 6 subcategories in the cold cut segment. And of course, clear and solid leadership in the ready meal category. We are also working on and developing new private label projects together with our partners. So we are working there with multiple retailers, and we expect these projects to already bring significant impact starting in Q2 of this year. Our investment, our capex plan for the entire year will be presented together with the audited results of 2025. This is because investment level will also be at a record level compared to the past 7-8 years, and we are still working on finalizing the entire capex plan for the Investalim project, but also for other current investments which we have in equipments and automatization in the current production facilities. So by the time audited results will be presented, the whole capex plan for 2026 will be presented as well. The positive side of things in the beginning of 2026, as Răzvan mentioned, is that price of raw materials is lower than expected before. This has been, we've been seeing a decrease in the price of raw materials starting in the second part of 2025, and this has been maintained also in the beginning of the year. We expect and we see already growth of this raw material happening. However, still the price of carcass and price of other meat articles is still lower than previous years. Other than that, sales volumes will continue to be positive on all sales channels, and the beginning of the year confirms this. And in the meantime, audited data from the market, from market research companies such as Nielsen, where we basically purchase research information from the market, shows that at least in the first month of the year in January, the market is continuing to see growth in consumption, which is a positive signal, taking into account that other product categories, even in the fast-moving consumer goods, are continuing to see decreases in consumption. So as long as consumption will stay positive with single-digit growth, we are convinced that we will be able to deliver all the results we have presented here in the budget for 2026.
Also, I think it would be interesting to come back to, if I'm not mistaken, there were questions related to the taxation and how this changes in taxation will impact our business. I think the numbers, I mean, it's clear the numbers shows that we had a very good second and then third and fourth quarters. We delivered plus 10% in the third quarter and plus 7% year on year on the fourth quarter. So basically, our analysis shows that even if the consumption, I mean, the people are actually worried about the future, somehow our industry is not affected in a similar way like others.
And also, it's important to add that our sales in the HoReCa channel are still very small compared to other competitors in the market. HoReCa is a channel, of course, you know very well, hotels, restaurants, cafes, and so on, which has been seeing significant decreases in the past 4 months. Fortunately, our exposure there is very, very small, so we don't expect this specific channel to affect our results in 2026. And in the same time, we still do not see consumers downtrading in categories from a more premium price segment to a lower price segment, which is another positive signal for the market and for us, taking into account that, of course, we are a company with brands selling significantly in mainstream up and premium categories and not in the value for money or everyday low price segment.
Thank you very much, Radu, and thank you, Razvan. This concludes
to answer all the questions.
Yes, this concludes our formal presentation. I think that it was a lot of insightful information. So on top of the report that we published last week, we can now open the floor for questions. As a reminder, if you do have a question, please type it in the chat window and we'll address them in the order they are received. I see that we have first questions so far, but I would like to give you 1 minute for those of you who would like to type your questions right now to do so that we can start the Q&A and we can go efficiently one by one without pausing through all your questions. Therefore, please type away. Thank you. Okay, I think we can go ahead. I think the presentation was very pretty exhaustive because we didn't get further questions. So let's go with the 2 that we have. The first question is, it seems to me that I haven't seen any volume data, just rates of growth. can you offer us any figures on the volume?
Yes, so I think that I mean we have the exact volumes published in the report we have published on the stock exchange. In this presentation, we have the growth in terms of percentage, 3% in the cold cuts division and 13% in ready meals. In our published report, we have the exact volumes which have been delivered on each of the sales channels in each of the categories.
How do you see the evolution of main raw material prices in 2026 and the same for the employees' cost? This, I believe, was already covered by the budget slide. I don't know if Radu or Razvan would like to offer any more color.
I think what we didn't mention is the fact that starting July, we'll have a new increase in minimum salary. So basically, the same pattern repeats. We already stepped in because usually there is a pressure coming from our employee. We increased the salary starting January for some categories, and we will align everything mid of June for July in respect to the minimum salary and the other salary. So basically, everything gets took into consideration for the new budget.
In terms of dividends, I see there a question from Caius. Yes, we will deliver 50% dividends for 2025, as mentioned initially in our policy of minimum 50% dividends.
Thank you, Radu. The next question: how much of the pork meat needed in 2026 have you already bought?
This we cannot answer due to the fact that this is part of the company's competitive advantage, and we would like this to stay as confidential info, of course. Part of the acquisitions we have done are materials on stock. Part of them are future acquisitions, basically futures for deliveries that will happen in the next few months. So this is as much as we can disclose on this subject. In terms of updates on M&A programs, as mentioned before, we are currently analyzing opportunities, and in the moment we are going to enter more concrete discussions, and we will have any specific deal in preparation or already with some conditions signed. We will communicate that to the market.
Thank you. What are the key risks you see for 2026 regarding the company valuation?
There can be many risks, of course. First of all, we can look at international events happening even now as we speak. Obviously, markets are very sensible and react to international events, potential other conflicts, and so on. So stock markets react immediately. Other risks for valuation, very difficult to say, as company performance is positive and continuing to increase. So other than international risks or events, we don't see other risks regarding valuation. I mean, we could only be influenced by behaviors in international markets.
And our performance, which we are comfortable with.
Perfect. Thank you very much. I see we do not have any more questions for now. Therefore, I believe we can conclude this teleconference. I would like to thank you all. I would like to thank you all for joining our teleconference. Next time we're going to see each other during the teleconference will be after the Q1 results are going to be published on 15th of May. Also, please note that next week on March 9th, on Monday, we are convening the general meeting of shareholders. We encourage you to cast your votes online using the e-vote platform or to join us in person. Until we hear each other again, if you have any questions, please feel free to reach out to us at investors@cristim.ro. Thank you all very much, and we wish you a great day ahead.
Thank you
Thank
very
you.
much, and we wish you a great year looking forward. All the best.